Good morning, I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The Asian Development Bank says boosting intra-Asian trade could be Asia's strongest defense amid global uncertainty. Japan commits 65 billion pesos to fund infrastructure, health, and climate projects in the Philippines, strengthening economic ties between the two nations. Hamas releases new video of 2 Israeli hostages as ceasefire talks break down and tensions flare up again in Gaza. First, let's take a look at how financial markets performed overnight. The S&P 500 surged to a 2-week high on Monday, boosted by gains in tech giants Nvidia and Tesla. Investors were also encouraged by signs that the Trump administration may adopt a more moderate stance on tariffs against key trading partners. Financial markets have been on edge in recent weeks, with volatility driven by fears of rising inflation and a slowdown in global growth after Trump announced new tariffs on China, Mexico, and Canada.
Once again, more discussion about tariffs. Maybe we'll pull some back. Maybe some will be temporary. Maybe. This is starting to become a little bit of an old story with these tariffs kind of coming and going. And you actually saw Fed Chairman Powell speak last week, which was pretty interesting, which I think led a little bit of, I want to say, benign to upbeat flavor in the market.
U.S. stocks rallied overnight, with major indexes posting strong gains across the board. The Dow Jones Industrial Average climbed 1.42%. The broader S&P 500 rose 1.8%, while the tech-heavy NASDAQ Composite led the surge, jumping 2.3%. Meanwhile, European markets closed mixed with only slight moves. The UK's FTSE slipped by 0.1%, Germany's DAX dipped 0.2%, and France's CAC 40 shed 0.25%. This as investor sentiment remains cautious amid global trade uncertainties. Stronger trade links among Asian economies could help shield the region, including the Philippines, from global trade headwinds. That's according to the Asian Development Bank. At the launch of its Asian Economic Integration Report in Hong Kong, the ADB highlighted growing regional cooperation in trade, investments, and in people movement. ADB data shows Asia and the Pacific outperformed other regions in trade and foreign direct investments, both crucial drivers of Philippine growth. Europe and the UK still had an edge in financial integration. But Moody's warns that the U.S. trade policies could dent export demand across Asia. Even so, economies like the Philippines, India, and Indonesia may weather the storm better thanks to strong domestic demand and more diversified supply chains. The Bangko Sentral ng Pilipinas is widely expected to cut interest rates by a full percentage point this year. That's according to a new outlook from S&P Global Ratings. The credit ratings firm says easing inflation across the region gives the Bangko Sentral room to loosen monetary policy. Now, if realized, the benchmark rate could fall to 4.75% in 2025, down from the current 5.75%. Last month, the BSP kept rates steady due to global trade uncertainties after a total of 75 basis points in rate cuts throughout 2024. But in an exclusive interview with the Bilyonaryo news channel's Trade Talks, Governor Eli Remolona Jr. said a rate cut could come as soon as their next monetary board meeting on April 10th. He stressed that the BSP will likely take baby steps, cautiously lowering rates to match economic conditions this year. Japan is pouring in fresh funding for the Philippines with over 65 billion pesos in new loans for infrastructure, health, and climate-related projects. Finance Secretary Ralph Recto sealed the deal during the 15th Philippines-Japan High-Level Joint Committee meeting on infrastructure and economic cooperation. Recto and JICA Chief Representative Baba Takashi signed 5 new financing agreements, including the Davao City Bypass Construction Project, Phase 4 of the Pasig-Marikina River Channel Improvement, and the Cavite Industrial Area Flood Risk Management Project. These loans support the Build Better More program, with Japan reaffirming its commitment to helping drive growth in the Philippines through sustainable, climate-resilient infrastructure. Japan is pouring in. Okay, we have that same story again, so let's take a look at our next story. Okay. On to the next story. We're going to be talking about rice tariffs. Okay, no. All right. New Transport Secretary Vince Dizon says that he's open to dialogue with jeepney operators, but makes one thing clear: the government's modernization program is here to stay. This amid a nationwide transport strike that began on Monday. G. Baroga has the details.
No one can stop modernization. That's what Transportation Chief Vince Dizon said at the start of the 3-day transport strike by the group Manibela. The strike was sparked by what they say are conflicting statements from the DOTR and the LTFRB regarding the franchise consolidation of public utility vehicles for the modernization program.
Kailangan i-validate natin ang numero. Yung mga nag-consolidate na, kailangan suportahan natin sila para tuloy-tuloy ang modernization. No? Pero kailangan nating tignan din ano ba ang totoong situation on the ground. No? And kung ano ang kailangan gawin ng gobyerno para maging successful ito, dapat gawin. No? Pero kung ang ibig sabihin niyan, hindi muna natin ipipilit ng mabilisan ang nationwide implementation, then I think we will have to make that decision soon.
According to Secretary Dizon, 86% of applications for the program have been submitted and over 40% have already been approved. The remaining applications are still being processed. The Secretary is now waiting for an explanation from the LTFRB regarding these numbers and expects solutions within 2 weeks.
Komplikado itong pagpapalit ng mga traditional jeep papunta sa modern jeep. No? Maraming mga aspeto to. Economic, kailangan dito tignan yung social, kailangan tignan yung, and pinaka-importante dito, yung route rationalization. No? So yun ang kailangan, kasi yun ang talaga magbibigay ng viability doon sa pag-transition.
The government has also made it clear they won't force transport groups that are still unsure about the program to participate in modernization. Secretary Dizon stressed the importance of listening to these groups and addressing their concerns.
Ang desisyon natin ay magbabase sa datos na makukuha natin, tsaka sa mga issues na makukuha natin sa ating mga transport groups. No? And that will mean looking at the implementation schedule of the PUV modernization. Meron na kasing mga ongoing na eh. Hindi natin ihihinto yun.
After meeting with Piston Group last Friday, Secretary Dizon is set to meet with 2 more transport groups this week, hoping that Manibela will join the discussions. He's also urging the group to consider limiting their protests to just 1 day. In the midst of the transport strike, the DOTR announced the extended nighttime operations for MRT3 and more trains during peak hours. To help affected commuters, additional trains for LRT1 and buses on the EDSA carousel are also available. For BNC Mobility, G. Baroga.
China denies receiving any asylum requests from former Philippine President Rodrigo Duterte. The statement comes amid reports that Beijing rejected Duterte's alleged application just before his reported arrest by the International Criminal Court after arriving at NAIA from Hong Kong 2 weeks ago. A spokesperson from China's foreign ministry clarifies that Duterte's visit to Hong Kong was purely a private vacation. Foreign tourists can now get a VAT refund when they shop in the Philippines, a move seen to boost spending and make the country a more attractive shopping destination. The government has just signed the implementing rules of the VAT Refund for Non-Resident Tourists Act, allowing foreign visitors to claim back the 12% value-added tax on certain purchases. To qualify, tourists must spend at least 3,000 pesos on goods from accredited stores and take those goods out of the country within 60 days as accompanied baggage. The refund covers tangible retail items like electronics, jewelry, clothing, and souvenirs. The policy brings the Philippines closer to regional shopping hubs like Singapore, Thailand, and South Korea, which already offer VAT refunds to tourists. It's seen as a win for both retailers and the economy, helping increase tourist spending, support local businesses, and generate jobs over the long term. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's take a look at how Asian bourses are faring this morning. Taking a look at the Nikkei 225, that's higher by 0.7%. Hong Kong's Hang Seng Index in the red, down by 1.4%. Shanghai's Composite trading sideways with an upward bias, up by a little under 0.1%. And Singapore's Straits Times Index higher by almost 1%, higher by 0.9% right now. Now here at home, recall Philippine shares closed lower yesterday, dragged by foreign selling and a shortened trading session due to technical glitches. The PSE index slipped by 1.2% to close at 61.92, with losers outnumbering gainers 2-1. Value turnover was thin at 3.9 billion pesos as trading opened late following a system connectivity issue that affected brokers' access to the market. For the rest of the week, analysts expect the market to retest the 61.50 support level, and if that holds, the index may continue to trade within its current range. Now let's take a look at the market today. As of 10:14 this morning, the main gauge is in the red, lower by 0.7% to 61.48. The broader all shares index in the red as well, lower by 0.9% to 36.57. Now taking a look at all these sub-indices, the financials, industrial, holding firms, services, and mining and oil counters are in the red, whereas the services sector is bucking the market's downtrend. It's the only one in the green, higher by about 0.5%. Now at the foreign exchange market, the peso opened stronger at 57.31 against the greenback from its previous close of 57.32. Now, the country is moving closer to developing nuclear energy with strong backing from the U.S. government. One of the key initiatives on the table, small modular reactors, which could provide clean, reliable power to remote island provinces. Sujin Kim has the details.
The Philippines is set to build its first ever research nuclear reactor under an expanded partnership with the United States in the field of nuclear energy.
You know, the U.S.-Philippine relationship has been on hyperdrive for at least the last 2.5 years, and nowhere is that more evident than when we look at civil nuclear energy cooperation.
In partnership with Valor Atomics and the EOS organization, the project will develop advanced technologies including small modular reactors, nuclear gigasites, and the world's first ever Generation 4 advanced reactor prototype under the Coordinated Research Project. The project aims to expand access to clean, affordable, and sustainable energy in the country.
The end goal of these partnerships today is lowering the cost of energy in the Philippines, enabling a smooth transition to clean energy sources, and reinforcing energy security in the Philippines.
The agreement also includes over 22 million pesos in funding to expand nuclear education programs nationwide.
It also provides an opportunity for thousands of new jobs, development of a supply chain industry, vast industry partnerships, potential for immense economic development.
Mindanao State University is poised to become the nuclear education hub of the Philippines, being the first university partner under the initiative. The project will build local expertise and advance the country's goal of achieving energy independence.
This partnership is not just about education. It is about securing economic and energy stability for both the Philippines and the United States. We're building local expertise.
Sujin Kim, Bilyonaryo News Channel.
Insurance coverage in the Philippines is on the rise, driven by a growing middle class and greater awareness of financial security. Sujin Kim returns with this story.
Despite low insurance penetration in the Philippines, currently just at 1.6%, insurance companies remain confident that the industry will grow. According to PruLife UK, penetration is slowly increasing, driven by the expanding middle class in the country.
It's a fast-growing market simply because the middle class is growing, right? So the insurance industry growth is heavily dependent on the size of the population and, of course, the size of the middle class. And on both fronts, Philippines is very, very favorable.
The country is also considered a prime market as the majority of its population is of working age, a sweet spot for life insurance as more Filipinos begin to plan for their future.
A median age of 25 positions it extremely low as an incredible insurance market. There is no doubt that the market will grow and grow fast.
On the financial front, PruLife UK CFO said the company is committed to growing faster than the industry average. In 2024, PruLife UK recorded 48.2 billion pesos in total premium income, backed by a nearly 500% risk-based capital ratio, a strong indicator of the company's stability amid market fluctuations. PruLife is targeting double-digit growth again in 2025, alongside the launch of new products. Among its upcoming products is the Sharia-compliant Takaful insurance for the Muslim Filipino community. In addition to new products, PruLife UK is also relying on its growing agency force, now nearing 40,000 licensed agents.
For 2025, of course, we need to sustain our market leadership. And so we have to grow faster than our competitors. We've been leveraging on our very highly successful agency force.
Chakrabarty acknowledged that insurance penetration doesn't rise quickly as it's closely tied to the country's per capita GDP. Even so, PruLife continues to push for greater financial literacy and insurance awareness.
It's not going to change overnight, but we work very closely with Insurance Commission. We work very closely with other government bodies to make sure that the awareness around protection, around savings, it keeps growing. There is a tipping point in per capita GDP after which the insurance penetration really takes off.
Sujin Kim, Bilyonaryo News Channel.
We're taking a short break. Business 360 will be right back. Welcome back. U.S. Defense Secretary Pete Hegseth denies reports that a U.S. official leaked classified war plans to a journalist as the Red Sea continues to be a flashpoint in global security. Hegseth, speaking from Hawaii, called the report deceitful following claims that Trump-era officials shared military plans in a private Cignal chat just before strikes on Iran-backed Houthi forces in Yemen.
Why were those details shared on Cignal, and how did you learn that a journalist was privy to the targets, the types of weapons used?
I've heard I was characterized. Nobody was texting war plans, and that's all I have to say about that. Thank you.
For Philippine exporters, particularly those shipping to Europe and Africa, any escalation in the Red Sea could lead to higher shipping costs, longer delivery times, and supply disruptions. Shippers have already started taking longer routes to avoid the area, which could mean increased costs for Philippine exporters and importers in the months ahead. Now, the Palestinian militant group Hamas released a video on Monday showing 2 Israeli hostages a week after ceasefire talks collapsed, prompting Israel to renew its military offensive in Gaza. The hostages were taken during the October 7th attack at the Nova Music Festival. Israel claims military pressure was key to securing last November's truce, which freed 80 hostages, and believes it's still the best way to free the remaining 59. But Hamas accuses Israel of breaking the terms of a ceasefire agreement in January. With no end in sight, the conflict continues to disrupt global trade flows and oil supply routes, potentially pushing up energy costs and inflation in import-reliant countries like the Philippines. South Korea's Hyundai Motor Group announces a massive $20 billion investment plan in the United States, including a new steel plant in Louisiana, revealed alongside U.S. President Donald Trump. The announcement comes amid rising global trade uncertainties, with Trump threatening to impose reciprocal tariffs starting April 2nd, targeting countries with large trade surpluses, including South Korea.
This will be Hyundai's first ever steel mill in the United States, one of the largest companies in the world, by the way, supplying steel for its auto parts and auto plants in Alabama and Georgia, which will soon produce more than 1 million American-made cars every single year. The cars are coming into this country at levels never seen before.
While this has triggered concerns for global supply chains, it also prompted companies to double down on investment commitments, a move seen by some as a sign of resilience and adaptability in global business. For the Philippines, that may open doors as companies rethink production hubs and diversify their supply chains. The country could emerge as a competitive alternative for trade and manufacturing in the region, backed by a young workforce and strong domestic demand. A global reset may be underway, and for agile economies, that could mean new opportunities on the horizon. And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel.